Welcome back. Joining us on the show now is Chirag Sheth. He's Principal Consultant South Asia at Metal Focus. Chirag, hi, good to have you. The last 24 hours clearly have seen a lot of volatile moves come in for the gold prices, majorly with the way the dollar index has been behaving. But you've been bearish from the start of this year, and we almost are at the prices you spoke about at $1,600 per ounce. We've done a low of $1,615. What's your sense now?
Good afternoon, Manisha. Yes, we've been actually saying this for now a better part of the year that gold prices are headed lower. So that has obviously, turned out the way we had, kind of forecasted. And I think we still believe that the fundamentals have not really changed. I think the moves that we are seeing essentially is something that we see in a classic, market when prices have fallen. Certain news comes in and there is a bit of short covering which comes in, So you are exactly seeing the way market behaves. However, as I said earlier, fundamentals have not changed. Gold prices are still expected to head lower, and probably over the next 2-3 months it will settle around 1,600 to 1,580 kind of levels.
Chirag, when you look at the speculative positions, the shorts that have been created are the highest in 4 years. Do you see a possibility of a squeeze there? Do you see positions being winded, or do you think more shorts can be created? I mean, you're expecting another $50-60 decline from current levels.
Yeah, so see, already I'm sure, the kind of move that we saw yesterday was a kind of a factor of a bit of short covering. So we are not ruling out that there could be further short covering which would come in, which could take gold prices higher by another $20-30. But as I said, because fundamentals are not changed, it may not be able to sustain itself at higher levels.
1580 is what you said in the international market is a possibility. For the Indian markets, with the kind of rupee depreciation that we continue to work with, what kind of support levels, what kind of a range now are you working for the final quarter of this year?
Well, as you're aware, Manisha, it's difficult for me to give a rupee forecast because we don't do that. But I think, given the fact that in the international market we expect gold prices to go lower and probably there is a bit of rupee depreciation in the play, we may not see that kind of fall in the domestic market purely because of rupee depreciation. However, given the fact that we expect gold prices to fall by another 4 to 5%, then probably 2 to 3% fall in the domestic market may not be ruled out.
Chirag, while we have been speaking to a lot of industry participants and they tell us that yes, store expansions are still happening and they are launching new jewelry launches, ahead of the festivities and the wedding season. But the kind of demand that we saw in the previous year, where there was a lot of pent-up weddings and demand for gold and jewelry, is not something that they expect to be mirrored in this year or this quarter.
No, that you are absolutely right. In a sense, if you look at Q4 of 2021 was sort of a record, Q4 in that sense. And so obviously for the market to replicate similar kind of moves would be difficult. Also, I think we need to appreciate the fact that Q4 last year saw a lot of pent-up demand coming in, because weddings were postponed, so a lot of weddings took place. So obviously the similar kind of, factors are not at play. However, I think what is, Manisha, really heartening is the fact that, gold prices have come down on a year-on-year basis. We've seen lower gold prices, and that will obviously bode well for the festive season. We've already got very early reports from our travels that, there is a good start to the festive season, probably because of lower gold prices.
So that's another factor really, because, if you bought gold last Diwali, you don't really stand at a lot of gains there, and people are debating that, investors especially, that if you buy gold right now, what kind of returns are you expecting then until next year end, or perhaps in the next 3 to 5 years?
No, that is absolutely right. And if you actually look at on a long-term basis, especially from an Indian point of view, the fact that rupee tends to depreciate 2 to 3% on an average, so obviously an Indian consumer will always stand to gain. Also, if you look at a long-term, Manisha, perspective, what we believe is that probably, gold prices should start going up by 2024 once Fed, starts cutting interest rate, and that's when gold prices could actually go up. However, next year we could see a bit of a sideways movement in gold.
So what are you looking at as a range for the next year as well? I mean, I was reading some reports and most believe that it is really going to be between 16 to 1680 on the higher side as an early forecast for next year as an average.
Right. So we basically believe that, we could see $1,500 as well for next year. And that's where, gold prices should ideally settle down because our sense is that Fed could actually stop raising interest rate by end of this year or early next year, and also the fact that you would have inflation under control, so real yields might be positive. That could weigh on gold prices. But once Fed starts giving indications of a further cut in maybe 2024, you will see a bit of positive uptake in gold.
So Chirag, as metal focus, what are you telling investors? Buy gold, but buy them less this time around than this festival, because next year you could be looking at even cheaper gold prices?
So I think as metal focus, we've always mentioned, especially in last 1 year, we believe gold as a portfolio diversifier would work well. Gold will perform some of the other asset classes, and that's why we believe that one should have gold in their portfolio.
Okay, one should have gold in their portfolio. 50,000, right? I mean, on an average is the price right now. Well, you never know. Maybe you could get it cheaper, as we were discussing. But this festive season, let's see how demand for gold picks up or not.